Good evening, guys. Ken of Tortoise Capital Nightly Strategy Podcast for February 7th, 2024. So we just did the fifth session for the book club. It was a review of the Kata 2 challenge. It's the best hour I've done in probably 3 years. So I'm going to make that available to the foundation's folks and subscribers. Well worth your watch. We'll start with the hybrid swing workshop, that portfolio. So this is Alcoa at this 30-minute bars. There's a bit of a gap down. It had a morning hook, long, standard risk, earned a fraction, exit before the close, mostly sideways. This is bottoming process, it looks like. That's good. AI. So yesterday we had that entry and we held it here. It gapped, I think it was down around here, and then resumed. And so we're still into this about 1.5 R in holding. And I didn't like that because I got murdered on Disney. And so I'm gun shy about holding overnight. So we cashed 1.5 on AI. Caterpillar, scratch. Cliff, no trade, sideways chop. CVS, a gap up and go, scratch. DIA, gap up and go with about half an R, little follow through. Disney, this was just brutal. So yesterday we got the 1, 2, 3 entry, put a 2R battle drill on it. Second entry, it closed here at about plus 7R, gap down to here. So the plus 7 went to -3 on this one and -1 on that one. So it went from plus 7 to -4. That's a 11R reversal of fortunes. And I was too gun shy to trade the recovery on that one. Just irritating. 7 birds in the hand is worth -4 in the bush, I guess. Devon Energy, this was a 1, 2, 3 in the morning. 1, 1, 2, 3 and go. And end of the day, closed +1. Emerging markets. Is up next. That was no trade. Ethereum. This was a Kata 2 continuation. So that was yesterday's trade we cashed. This thing held, broke above the dragon, so re-entered. Standard risk. It closes at the top, so we're holding +2. And bravely holding overnight. Let's see here. We have Mexico. So this whole complex rolled over after this really nice run up to here. It rolled over. Here's the RL30 rolling over, the PSAR rolling over. Got the PSAR flip, standard risk. Exited here when the dragon caught up to it for +1. Notice also the dragon rolls over. Brazil, same trade, basically 1R. Everything rolled over in Latin America. Intel, no trade. IP, I got this one after this amazing sideways quiet channel we talked about yesterday. This thing just quietly went north of the dragon and above the Bollinger Band main. So I snuck an entry into it. And right here at the close, you're holding 2R. So what do? Do you sell, hold, or buy another one? 1, 2, or 3. Go ahead, register. If you're going to sell, type 1. If you're going to hold it, type 2. If you're going to buy another position, type 3. Yeah, because I sold. I know how to re-enter. It's IP, so the chances of it being a runaway maniac tomorrow is low. Um, but that means also there's not much implied gap for it to really work with. So I thought I'd just cash 2 and lick my wounds from Disney. So recency bias. Everybody's got to sort that out for themselves. Uh, IYR. I closed the trade. This was part of blowback from Disney. I cashed 1, and then it really went nowhere, and then collapsed at the last half hour. So nothing there. Coke was a scratch. Regional banks was an overnight hold, and that benefited from a sell-off and then a gradual recovery, and it improved all the way back to the edge of the dragon. So I decided to cash +3, and then just watched it the rest of it. It held pretty tightly right here in a doji, so that could be a breakout from that tight range tomorrow. Regional banks. McDonald's, Gap and Go, cashed 2 on the rollover. I might have stayed too long on that one, but I really wanted it to work. It peaked here, at which point we were holding a little over 4R, and then it gave a 1, 2, 3, and I had to get out before it hit the VWAP. So we cashed 2, but I gave back, I think, more than I needed to. Merck, out of 2 continuation for 1. Microsoft, Gap and Go, and I'm holding that one overnight with +3. Market leader. Marijuana, no trade. Nike, Gap and Go. That's when I cashed 3 at the edge of the dragon. So I kept Microsoft and cashed Nike. Nvidia, this was a Gap and Go that I'm going to hold. It's holding 3R at the close. PBW, 2R. This was a SSC. PSAR flip. Rising dragon, rising VWAP. And it was an orderly move, but again, I can get it tomorrow. Rivian, no trade. FPY was a gap up and then a sideways chop. Treasuries was a sideways chop. Tesla was a COTA 2 re-entry, but sold off for a half on no follow through. Walmart was a close of yesterday's COTA 2 re-entry. It gapped up really high. This is what that dragon horns looks like, fellas. So it gaps here. It goes all the way up, comes down and closes here, opens here, goes all the way up, and then starts dropping like a rock. We think of those as the dragon horns, the exaggerated move that then has no support and starts collapsing. So that explains the 2 or 3R gain in Walmart. And U.S. Steel, this was a Gap and Go. This one also had a nice run up to here and then down to here, and then it slowly decayed. I was ready to pull the trigger, but it held above the VWAP. And then when it couldn't make a afternoon run, I cashed here for 1 hour. I watched it all day, do nothing. This is sniper trades of the day, 3-minute charts. So this one is Microsoft. This was the intraday tactical trade. Here was the close. Here's that gap up. And there's the OR3. So this breaks out above that. Standard risk for a couple R. Thought of 2 reentry. Oh, the grind. And this is one where I elected to convert that to a swing. So I sold off the excess portion, but decided this is the one I was going to hold overnight because I like that. This one is Ethereum. This was the close. So here's the open. It gives a 1, 2, 3 PSAR flip, long, standard risk. I'm watching this price as the, I really want to add if it gets above there. It fails a fractional loss. I play the rebound as an SSC, half an hour loss. I play the uh, Cloud of 2 again, just keep firing. Oh, second position, and that's when I cash to get my money back. So that's about 4R to offset the 2 losses here. Try one more Cloud of 2, scratch. So netted 2 off the after the smoke had cleared. This was U.S. Steel, 3 minutes. So big gap down. Runs all the way up 1, 2, 3. When this cleared everything here, I get long. Standard risk. Second position. This was a nice early morning move. 1, 2, 3, 4, 5 on the first one, 2 on the second one. So that helped ease the pain of Disney a little bit. So +7. Got a 2. Fraction. Now, for George, I want you to study this one. Print this one out after you get a screenshot when this is done. So this is EWW on a 3-minute, just to show you what, the information that's available on the 3-minute chart, right? So here's the close. Here's your OR3. Now it opened here and closed here. It opens here and now it's coming up through here. I get a nice fill right there. Where do I put my stop? PSAR flip. It's not working. It's rolling over. The R10 rolled over. It went through the VWAP and the edge of the dragon, and I get a bad fill on that one. So that's about -0.3. BSAR flip. I now have this is like a COTA 2 here, and I really treat that as an SSC, because I don't really think that was enough of a successful move. So that now feels like support. So I'm going to take that. My 1 hour loss is going to be here, but that's the Bollinger Band mean. So I'm going to pay attention to that. Exit. Now it rolls over. So I activate the skin of the dragon exit. So that's about 0.8. Now it falls, it does a PSAR flip, goes through the Bollinger Band mean, goes through the VWAP. So I'm short here. Standard risk box there. This is where if I'm very aggressive, I can think about the second position when all of this collapses. I don't, because I don't have 2R in hand. Miss the 2R battle drill, and then cash that one for 2. So that's 2.8 minus 0.3, nets 2.5 from the open just to the start of lunch. That's a lot of information available on 3-minute charts. It's not available on the 30s. And I have enough room on the screen to be able to see what's going on. And I'm not trying to look through the wrong end of a microscope to see what's going on in there. Traders. This is Hamad on Euro pound. Now this short with this, now notice the stop that's right here. Never hit all day. Theoretically, the maximum positive trade would have been down to there. Quick exit. This is not an entry. It hasn't broken above anything like support here yet. Let's see it get above that. I I respect the effort. Quick loss. If you're going to be that quick, be short there and get that trade. This is not a harsh winter, I don't think, or is it? Let's go look. Is that an SSC? That's this is not an unambiguous harsh winter to me. I mean, it yeah, it is down here, but when you look at it's moved almost nothing. So that's still in the I see all of that is in the noise. And the noise is downward. So if I want to be anywhere, I want to be short instead of these longs. And I want to give it some room to run. So I just think you're making sawdust here. I don't think there was that's not a mover. On the other hand, this one had some moves. Wait a minute, there was a question. Hold on a second. Disney, here's that brutal gap down. So it's in play right from the get-go. I like this entry. It's you let it find support and then continue. Cash money, re-entry, cash money. I like the patience. Scratch. I like the long scratch. It's now coming into a compression. So I think those should not be taken. It hasn't expanded yet. Maybe I take this one. I mean, it didn't hurt you, but it still feels like we're trying to make it work. In that case, you did. You got 0.5 out of it. Tesla, I think we're very aggressive getting that second position in. It's not warranted. So you're short here, stop and reverse here. You put a second position on here, and uh, we're barely 1R. I would like to see it get above all of this, and then we just grind ourselves. This is after the Z3. This is probably a Z3 pinch. That's nice. That's nice. Or maybe only one extra trade too many in here. Merck, uh, multiple scratches and one false start. This, you probably had span of control and looking at other issues. You know, this sell off and recovery. There's a PSAR flip in here. So that's a potential move, a pullback. That makes this a COTA 2 somewhere in here to get that move. But not much. Healthcare was on fire yesterday. This may just be topping action in Merck, and it's done for a while. Yeah, close to breaking the 10-day high. It feels like it's done. Nvidia offered some early strength. PSAR flip and a run up. This is late to get in. That's like an emerging dragon instead of the COTA 2, which at least saves you 0.8. This is a better COTA 2 because it's hitting it before it breaks above. So you got paid, quick scratch, and got paid. So this got better. I think this is the only one I quarrel with. I think it should have been here. After this quick dip and reversal, there's your OR3. That may have been a move. Yeah, I agree. Better performance after lunch because you've had 2.5 hours of information. So take that under advisement. I am seeing the same thing. Ilker, you were insisting on making Alcoa work. So here's the OR3. You got short +1. You got short again. This could be short again right here instead of here. This was a scratch. You try to get short again. So -1. This is premature. Let it break through the VWAP. It's through the VWAP, but let it break above the PSAR. It didn't, which means when it rejects the PSAR, you could be short here or here, and then at least scratch. This is a good entry long as opposed to an exit from this one. This is a good entry long because it's crossed the PSAR and the VWAP. So you could get long here instead of here. That's a good trade. This one felt like crossing the VWAP and a collapsing dragon. I feel we could have gotten that one. And then you have higher lows. That makes this an SSC. That makes this a COTA 2. And that's when it's moving. And we ground out another 2R losses in the chop in the last stages of the day. So that feels like some frustration and emotionality. DIA, grind out 0.8. That's good work. Oh, sorry. EWW, see my earlier discussion. This, I think, is a reasonable scratch, good short. This is sticking around way too long on the CD. That should be where your SOC entry is instead of all the way up here. This one, I think you just wanted to get paid, and we missed 1.5 R because of that. So we got to not be gun shy. We got to follow the dang rules. And in both of those, we let the big moves of the day escape because we were carrying over the emotionality of this into those two trades. And so we didn't get that. We didn't get that. So we got to look. That's a zero state lesson right there. Not prepared to trade in the morning on KRE. So, the trying to make it work here. Those are both reasonable shorts. I don't have any quarrel. If you stay with it, that's still a reasonable short. In fact, the fact that the shorts didn't go far, right? So you take this one and it gets here, but then it rolls over. It does not go higher. And you get short here properly. You exit here, but it never breaks out. There was the lack of movement to the upside was confirming the short. And here's your VWAP magnet going to try to pull that all down. So trust the indicators. George, good scratch. I like taking the shot. Maybe it was 2 bars later, but that was yesterday. So you got in when you could. You gave it plenty of chance, and you took the exit, and it timed out. I think that's really good work. Same here. It didn't work. It cut right away, and you stayed out of the chop. Good work. Gave it a chance. You cut it. Gave it a chance. Made a little bank and re-entered. I think you're probably still holding on to that one. Of all the ones in the Dow that used to be strong, I actually think this is a reasonable hold because it's had 4 days to collapse. It didn't. So there's still some residual goodness back in here. That's one I could understand holding overnight. This one was 2 efforts on the long side in Intel. The tech leader did not lead, and I think you managed risk well on that one. Saying this at Walmart did not follow through. I don't blame you for not shorting that. This one I think is setting up for a big move tomorrow. Be ready in either direction. The fact that it did not follow through today now puts the previous earnings at risk, but the pullback now gives an opportunity to buy on dip. So that's one that I like being in a state of maximum uncertainty. Don't know what's going on in its own little zero state. So I would be ready for this one tomorrow.
Hey, Ken, can I ask a quick question?
Good. Just a minute. Question?
Yeah, so like on this chart right here at 11 a.m., I mean, it's easy to see that when you look at this chart that the RL10 crosses the
We're talking
bracket.
this one here?
Yeah, sure, any chart. Yeah, right here,
Yeah,
like 11.
yeah.
Right. But
Yeah.
but you don't, in real time, all you see is the RL10 crossing the dragon, and you have a gap there, And I'm noticing these gaps.
This is price. Yeah, there is a gap between when the RL10 moves, and if you get a price spike, there is a gap between when this bar is open, as we have said in the foundations course. When this is open, the RL10 dot is there and the PSAR is still up there. Price is traveling in here. That's why I use the -1 is the last dot. If price goes through the -1, I like to get long right there.
Okay.
You will then see when this bar closes, here, the R10 prints right here, it hasn't flipped yet, but you can be long right here because price went through, actually, not almost right there. You would have been long if it could have gotten through that dot.
Okay.
So when we talk about the PSAR -1, when this bar is open, the bar that is the signal for a runaway price is that one. So you go right here, and now the R10 is still chucking along, but it's had like 10 bars of sideways chop. And now this is where all the buyers decide to hit it, and it starts running price up. So when the R10 is way down here, and then the live bar starts shooting up, the way we resolve that tension is we say, look, here is the sideways chop. The price that'll get us in is the last printed PSAR, which is still coming down. So if this thing turns out to be a runaway move, you might get 2 or 3 bars before the PSAR. Now the R10 finally pulls through, hits the PSAR, and then flips. But if you wait for that, the PSAR crossed here, but the price is up there, so you miss the big explosive move that we want. So the way to solve that is looking at the PSAR -1, putting your entry as now all the way down, you could actually be like a trailing stop entry, right? And then when price runs through that, you can take it. And then your stop is the belly of the R10. So that gives you, the only way you lose 1R on that one is you got in here, and then this bar that just ran all the way up turns around and runs all the way down on the next bar. That's the price. If they do that, then they get you for 1. But this allows you to observe this sideways choppiness, to respect the PSAR, but allow for this very strong move on price bar. And if you notice, there are times when Mexico does that. And that big move up was followed up by some follow through. So there's lots of bars where price moves away from this sideways chop. And so the PSAR -1, when price goes through the PSAR -1, I just hold my nose and take the entry. And then I trust the R10 to catch up. Most of the time, the R10 catches up pretty quickly, but there's 1 or 2 bars where there's a little bit of a gap. So that's the trade-off that you get with the R10. If you don't use the R10, now you're in the business of trying to interpret each and every little price bar and the length and the width of the tails, and that's too hard. You can't trade a lot of symbols by doing that. So most of the time, the R10 is good, and it gives you important price peaks. But when you have a sideways chop and a explosive move, the PSAR -1 is the indicator. Does that make sense?
Yeah. Thank you.
Okay. Let's see. Last one for George. Again, quick cut. Now see, here's one, since we're right here. This is one where you get this sideways quiet, but there's no runaway price, and it just kind of schmoozes its way up into here. This is a case where price and the PSAR, or I'm sorry, the price and the R10 both hit the PSAR dot at the same time. This is the absence of that runaway price move. And that's one where it's, I can take that as a signal. If I'm going to take that as a signal as a PSAR flip and use a price box of something like that, now that's about 12 cents in EEM. This might be the case where that's probably less than the R10. Let me see what EEM's R10 is. 4 cents. So that's actually a legit. What's this? Where did my symbol go? So yeah. So this is the case where as narrow as that looks, the R10 on this is 4 cents. So in practical terms, this late in the day, my spider sense would be here. I would position size off of the Bollinger Band main. I would say that would be my 1R loss, but I would execute if it fell below that. If it moved 12 cents against me, I would take that as a 0.5 loss. I would position size against that. Because my belief on the upside is if it can get through this, there's no resistance above. This could really go. And then where we are during the day is that's still at like 10:30 in the morning. So I still got 5 hours for this thing to go. And it had a big gap up, resisted all the urges to fail, quietly starts creeping up. That feels like a triple top ready to, maybe it could go. So I'd be willing to take that shot. That gives you the comparison of two different price actions. One of them, you had a price action that was sideways, and the R10 was kind of like in here, and the PSAR was drifting down. Then you get a live bar here, and that's the PSAR on the last closed bar, and then this thing starts going right up. So right there, if that bar's open, I just take that as my entry. Price hitting the PSAR. That's if it's a sudden explosion out of this base. Because something just happened here. A bunch of guys came in from a long night at the bar and decided time to buy. Whereas this one, you have sideways quiet, PSAR's coming down, the R10 oozes up into this, and the price doesn't run away, but it just increments forward. So everything meets right here. So I can take that as a price entry signal. Check or hold?
Check.
Check. Okay. Last one there, my brother. Is this a 9? This is the 3-day that you've been working on NVIDIA since the start of the year, really.
January 10th.
Yeah. So So this is That's January 5th, January 10th. That's end of January, and this is all Feb.
Yep.
So the emerging standard risk, 2R battle drills all the way up.
Yep.
Well, these are 2R boxes, but you got 3 positions in,
Yeah,
and then just managing it here.
And I have the
Have
rule
you
not to
exited?
go above. I haven't exited yet.
Oh, that's right.
This is one that, on the 3-day, I'm going to wait till it gets closer. If the PSAR starts getting closer to the RL10, that's when I look at it. But it just broke out of that's a Z3 line, that black one the thin black one at the top. So that's a Z3. I mean, 2 day or 4 or 5
so it's
days
above Z2. Yeah.
Yeah, 5 days ago.
So there's
the Z3 breakout.
Here's your river. That's Z1. There's the dragon is right on the edge of the river, and that's probably Z2, and that's Z3.
Yeah.
Yeah, and we're up right in here. So it's between 2 and 3 on 3 open positions on a runaway move for AI.
So now it's just.
So the trade's up 30%.
I could have switched this to a 9-day, but I'm just with our recent study. I'm just watching 3 days for now.
To me, though, the 1-day chart's just showing that we're at the oxygen's getting thin up here.
Yeah. So if it, that's the range. That yellow box is the range for today. if it goes another half down,
Yeah.
I'll get out. Because
Yep.
no sense in being greedy.
Track it. Give 1 hour back. Yeah, if you give 1 hour back on 3 positions, that's a 3 hour,
Yeah,
and that's a 10%
that's a
cushion
10% stop. Yep.
because you're up 30 R.
Yep.
Yep, makes sense. All right, daily report. Now, why am I gonna stand by while I reopen this again? At some point, I'm gonna remember that it does this. All the memory must be used up in TC 2000 for this, for the video memory. Well, I have to say, while I'm waiting for that other thing to open up, those of you that know the story behind the creativity research for the Army, our insurgency movement survived. We infiltrated the research study and statistics up to the 3-star general, and he demanded that we implement it in the school next year and across all Army schools next year, and to get on with it. The dean and the director of leadership had tried to put a lid on it because the older creativity curriculum was their lesson and they had an ego attachment to it, and so they stifled our work. Meanwhile, everybody else in the Army that's using our work is getting much more creative and reporting great results. So we infiltrated information on the research up to the 3-star, and he just said, stop monkeying around, implement it next year, go. Now, the dean just retired and the director of leadership got fired. So there's, in the leadership vacuum that's there, the heroes of the nation win the day. So we're going to be able to start using the same material that we have in Creativity 202. Now the Army's going to more fully embrace it across the entire professional military establishment. So I could end up getting very busy on that if I'm not careful. Anyway, that was good news. Let's see. Let's get to the report. We're here now. We're not ready. Bullish normal, strongly overbought. Volatility that's the only warning being flashed. DIA is strong. OEF is the S&P 100. So if you wanted something that had more components than the Dow 30, but you didn't want all 500 of the S&P, you could play OEX, which is the top 100 large caps of that 500. So if you looked at that, you took the top 100 biggest of the S&P 500, you'd get OEX, and that's this one, or OEF. I mean, yeah, big moves in Disney and in Nvidia. Big moves up in the Qs and SPY and XLV staples. A handful of goodies in the auto framer. Sorry for the jumping around. There we go. I still like Intel. When it goes, it's going to go. It's compressed into an amazingly tight range. Tesla, too, I think today was quietly encouraging. I like the small caps as a tag along, getting pulled along by the S&P. Intel and Coke in the pinch. Big moves in the usual suspects. Leaders continue to lead. S&P, the Qs. XLK was really strong today. Tech. Love Microsoft. Like Nike. Microsoft is already fully engaged and going, but Nike has still some underperformance to overcome, so there's more room. Tesla quietly trying to overcome its sell-off. And I like McDonald's and U.S. Steel for continuation. The usuals. And yeah. We're still monitoring this. The range extension still, the oxygen's a little thin up there, but the RL30 is quietly trying to get it done. The RL10 is reversed. So I think we still have some gains ahead of us. All right, fellas, that's everything for today. We'll get this published and posted, ready for tomorrow. And like I said, the session we did and the book discussion is really well worth it. I think we're going to add it to the How to 2 Challenge course as the opening 1-hour lecture on how to get it done. And I am probably going to offer that to the world as a standalone lesson and workshop masterclass for $197. So if you are already a subscriber on Patreon or a foundations person, you get that just for playing along. All right, fellas, take good care. See you soon.